Hi there, thanks for tuning in. Today, we're going to be doing an analysis and valuation of the Hellenic Telecommunications Organization. What is this company? Essentially, it is a company that is the largest telecommunication provider in the Greek market, and they also provide some services in Romania as well. So, as you'll see, they have 3.5 billion euros in revenues, they have over 10,000 employees, they have a market cap of a little bit over 6.3 billion euros, and yeah, they just have a huge presence as a telco provider in Greece, a little one in Romania, and I think they're very interesting. They have so many customers in so many different aspects. They have mobile customers, they have fixed line customers, broadband, and they have fiber, TV. So, they're a general all-purpose internet and mobile and telecommunications player, right? Which is great to see. So, they seem to be giving a lot of money to shareholders recently. This is all in their annual report, which you can see in a website format, which I think is pretty cool. But basically, they are showing us that they gave back a lot of money to shareholders this last year, right? In 2022, they gave 250 million euros in dividends and 252 million euros in share buybacks. That's a lot of money that is being returned to shareholders. Now, for 2023, they say this number is going to decrease for both dividends and share buybacks. That is probably fine. And it's going to depend on the free cash flow that they end up having, really. If they have maybe more free cash flow than expected, they may end up returning more to shareholders. But it's good to sort of temper those expectations. But they are a company that does actually care a lot about remunerating the shareholders, right? And that's very, very important. And now, the numbers here, you see that this last year, overall, the picture has looked really good. So revenues are up, adjusted EBITDA is up, capex is up, but free cash flow is up even more than the capex, which is exactly what we want to see. The dividend per share has stayed somewhat consistent. It's going to increase a little bit from 2022 to 2023, so that's what you want to see if you like dividends. And then the net debt has gone down, as well as the debt to EBITDA ratio, right? Which that's exactly what we want to see. And this is important because in the case that the company has to liquidate, right, in the case it goes bankrupt, well, first all the debt holders are going to be paid, right? All the banks, the bond holders, the financial institutions, and then if anything is left over, then the shareholders get compensated. So that's why you want to see a very low debt ratio. So it's great that the debt is pretty low, and especially when you think about it, if the revenues are 3.5 almost billion euros and the net debt is 726 million euros, then they're in a pretty good position. And it's great because in the worst case scenario, the shareholders still get something back, right? Now, they also have a fair bit of debt, but the debt maturity profile is pretty good. There's pretty low interest rates here, usually less than 1%. And I will stress this up here, which is that the S&P credit rating on OTE was upgraded from positive to positive from stable, rather. So this is great. This means that in the future, if they want to borrow money, they will get an even lower interest rate. This is amazing. And actually, the country of Greece as a whole has had their credit rating upgraded by multiple ratings agencies recently. So that also means that foreign investors may shy away less overall from OTE, which is great to see for them. It's great news overall for their specific panorama, right? Now, I want to make a quantitative model for OTE, and I'm going to make two assumptions here. One of those is that net income margins are 10%. Lately, it's been in that vicinity of around like a little bit above 11% of revenues get turned to net income. What is that? It's after discounting the cost of revenues, your operating expenses, your taxes, and what's left over is 10% of those revenues, right? So I'm being a little conservative, saying it's going to be 10%, not that 11, 12% that it's been in these last couple of years. And I'm also going to make another assumption, which is that the percentage of the net income that is turned to free cash flow is going to be about 180%. Free cash flow is going to be about 180% of the net income. How can it be more? Well, if you see, free cash flow is a calculation of that starts with net income and then you add or subtract a few other things, right? And Hellenic Telecommunications has a very, very clean cash flow statement whereby they basically grab the net income and just add depreciation and amortization, and everything else is pretty much non-existent or minute numbers. For example, they don't have stock-based compensation, at least not in their statement of cash flows, which is really good. So I'm not resting that away or discounting that away. So yeah, so for the future, I'm going to say, okay, we will stick with this number for free cash flow, and we will stick with this 10% of revenues get turned to income. And so any rate at which I grow revenues will be the same rate of growth of income, and thus the same rate of growth of free cash flow, right? So what am I going to do here? I'm going to grow, I'm going to say Hellenic Telecommunications, both revenues and profits, right? Profits at 10% margin are going to grow at 1% per year. I'm doing this to be very conservative. I'm going to say, okay, I say maybe in Europe the growth rates are a little lower. A telecom company is pretty big and bulky. So, how fast can they possibly grow? So I'm going to say they're going to go grow 1% in 2023, 2024, all the way to perpetuity. My perpetual growth rate is also going to be 1%. And this is not out of line with the historical estimates. You will see a drop in the free cash flow numbers from 2022 to 2023, again, because I'm shaving off that margin. I'm saying, okay, maybe their profit margins are a little less good this year, right? And I'm also going to have a required rate of return of 11%. 11% is 1% more per year than the market would give you on average, at 10% per year. And over time, this compounds to be a lot. 1% per year over the course of decades is a whole lot, right? I'm also going to divide it by the number of shares out, and then we get a fair value of equity of $15.15, right? I'm converting all of this to dollars just so it makes sense for me because I invest in dollars. Now, we have to subtract the net debt here. The net debt is 540 US dollars, or 540 million US dollars converted. We're subtracting that from the total value, and then we will get a fair value post debt of $13 with 88 cents. Okay? That's the fair value number I'm getting. Where is Hellenic Telecoms right now? Now, I'm looking at their ADR, ticker symbol HLTOY. But basically, as of July 17th, their stock is at around, or their ADR is at around 8%, right? Or $8. And they have a dividend yield of 4%, the PE ratio of around 15. It's looking interesting. And you'll see this 5-year chart, if you bought it at many certain points, you're probably pretty happy with it. If you bought it in 2018 here, where it was basically in the 5.5, if you bought it in 2020, in the 2020 lows, you're also probably pretty happy with it. So maybe you didn't see insane returns, right? 30% over the past 5 years is not crazy. It's not market beating necessarily, but you're also probably not unhappy with it. And the thing is, Hellenic Telecom has room to grow and seems to have some positive catalysts, although a little bit of risk. So let's actually talk about it, right? Because it seems like the value I'm getting is way above the current value of the ADR right now. But we have to talk about the risks and the rewards, right? So the risks are the currency fluctuations, especially with an uncertain geopolitical situation, can take a toll on earnings, especially if you're investing from outside of the EU. Revenue is also increasing very slowly, if at all, and a comeback is possible, but not certain, right? Hellenic Telecom used to make way more money, and that slowly decreased. And of course, this followed the Greek economic trends where they had a very tough time in the start of the 2010s. Now, it seems like Greece is making somewhat of a comeback, but this comeback has to materialize, right? And Hellenic Telecom has to grow their dividends or their revenue back up to the levels it used to be at, right? So revenue is increasing, but it's just a company that, if you look at a 10-year picture, its revenues have not increased compared to those 10 years ago, right? So the possible rewards are that Greece recently received an upgrade in credit rating, along with OTE, as we saw. Standard & Poor's made its outlook positive instead of stable. This will make growth and foreign investment way more appealing, and debt to have a lower interest rate, which is great because that, at the end of the day, will still affect their bottom line and make them earn more if they're paying less interest. OTE seems very keen to return money to shareholders through dividends, buybacks, and debt repayments, which is amazing. And that fair cash flow calculation I did, or fair value calculation I did with my discounted free cash flow, that number would only increase. The more shares they buy back, the more debt they pay down, right? So that would make their total value in the future higher, assuming everything else stays the same. Free cash flow is also very consistent. Revenues may be growing very slowly, but free cash flow, and even in years where the revenue is down, free cash flow was usually up and was very consistently growing. We love to see that. And we love a company that talks about free cash flow. Often, companies that don't have free cash flow talk about revenue, and companies that don't have revenue talk about their total addressable market. This company talks about free cash flow. We love to see that, right? So, these are the risks and the rewards. And with that said, I will just tell you that you should look for opportunities worldwide. I think Hellenic Telecommunications is very interesting for sure. And if your numbers and assumptions match mine, it can be an opportunity that is worth taking a deeper dive into. Now, with that said, I hope you learned a lot, and I hope you learned that there can be opportunities worldwide in places where you may not think to look, right? And if you like this video, please comment and subscribe, and tell me if there are any other stocks that you would like me to look at. I would be very happy to do so. And with that said, please have a great rest of your day.